Welcome back, everyone, to another Bull Room episode. This is episode number 12, Adrian?
Number 12.
Well, let me tell you guys, if this is your first time tuning in, what the Bull Room is. We pretty much talk about investing in stocks, crypto, real estate. We haven't really touched into it, but we will. And we talk about how we could potentially make money in these markets. We also give you updates on what's going on. So make sure you guys like, share, and subscribe. And if you guys could do us a favor, you guys need to pay the fee. The fee is quite simple, has nothing to do with money. Recommend us to a friend, a sibling, a relative, or someone that is a like-minded individual. And with that being said, what's up, Adrian? How you been, bro?
Can't complain. How about you?
I've been good, bro. And I think we have a good one today. You know, we're going to talk about the beginning of quarter four. So these are the last 3 months of the year. So it's going to be should be a good next 3 months for some companies. Some companies, this is their peak season. This is where they make money. And we're going to talk about the top 3 stocks, my top 3 stocks for Q4, and Adrian's top 3 stocks for Q4. But with that, before we talk about that, let's talk about the Treasury yield. Falling back from a 16-year high after a weak U.S. jobs report, bro. Like, how do you see the economy, dude? It's kind of crazy that our president, Joe Biden, is over here flexing it, and we're feeling otherwise.
Well, I think we talked a little bit about it before. I mean, it's kind of, the reason why he's kind of saying like, oh, you know, it's kind of a good thing is because, well, yeah, it kind of inadvertently brings inflation down.
Which is our goal.
Which is the goal, but it kind of sucks because
at what cost?
Everybody's cost.
It's like
at the middle class's cost and at the lower class cost.
No, it's mainly the middle class. The lower class always gets a helping hand.
Oh, that's right. Yeah, you can always work at Jack in the Box, right?
Bro, and they get paid $20 an hour now.
McDonald's does.
No, all fast food workers. In California.
I thought it was just McDonald's.
No, bro, you might have to go to McDonald's.
I think so. I think it's time.
Are you going to quit MP? And
I think, yeah. I think so. I think they're going to pay me more. Yeah. Actually, you know what, guys?
You know what's funny, bro? Even FedEx workers get paid 6 figures.
Yeah, well, they have been, right? If you were like, but then they're working every day.
No, like they're guaranteed this was on like their union
even if they
deal.
Just come on.
Well, if they're full time.
Yeah, right. Yeah.
But that's ridiculous, bro.
Pretty
Like,
crazy.
where are we gonna get to the point, bro, where we have $40 shipping and $20 burger combos?
Mm-hmm.
Like, what extent? Where is this gonna be? Where's there gonna be a stop? Where's there gonna be like, okay, this is enough?
Well, I feel like the only reason why the only reason why it doesn't work is because, well, yeah, a lot of these companies have a stock. So they all have people to, you know what I mean? Like
investors.
Yeah, investors. I'm sorry. That's what I'm like.
To report back to.
Yeah. So if they don't, because they could take a little bit of a loss, like realistically, it's not going to be that big of a, out of their, how much money they're making every year. God. But yeah, besides that, I feel like that's the only reason why it sucks. Because some companies, for example, In-N-Out here in California, they've been paying $20 an hour for a long time.
But they're a private company.
They are a private company. Yeah.
So they don't even have to report to nobody.
Yeah. But still, they still have to report how much money they make.
Okay, but what if that was... Either way, bro, like, I find it messed up because there's a lot of jobs that don't pay 20.
Yeah.
A lot of industries that can't maybe afford to pay 20. Mm-hmm. Maybe not just yet. Mm-hmm. And now they might lose employees because those employees might go to McDonald's. Like, I might lose Adrian.
It's true.
It's a sad truth, though.
It's true. Yeah, it's true.
And at the end of the day, why are we rewarding a job that was supposed to be made for like students, fresh out of high school, fresh out of college to begin working in the workforce? These jobs were never made for someone to live off of. Minimum wage was never made for someone to live off of. So until we get that understanding through, and even people in our community, right? I mean, I understand, we have immigrant parents, we have people in our community that are immigrants, and, they have to work these jobs. I understand that, For them, it's quite different the way they see it, right? But I believe that if we don't share that to the generation that's here, right, like their kids, right, and they get stuck in the same cycle, And you have these laws where it's like, oh, $20, give them 25, give them 30. Like, what are you essentially really doing? You're creating a citizen, right? A U.S. citizen, right, to be dependent on the government, and literally to be praising a forced wage raise. Like, you didn't earn that; you forced it upon somebody through law.
Yeah,
right. I think it's ridiculous, bro. I mean, it's generally crazy, and even then, we have a week U.S. jobs data. Yet California is passing $20 minimum wage for fast food workers.
I think the only thing that's going to do is they're going to try to minimize how many workers they're going to have. So now what's going to happen?
Cut down staff.
Yeah, and so now they're going to have to pay more. But I don't know. I mean, 20 is a little high for sure.
For fast food?
For fast food, it's
definitely
a little high.
It should be at 15.
I don't think 15. I mean, this is not financial advice. We don't know shit about anything. But I feel like 19, 18 is a nice middle ground, bro. Like, that's fair. That's fair for fast food.
That's coming from a guy that's never owned a restaurant.
Yeah, that's true. But, I mean, there's always cost for everything.
No, you have to see how the margins are first. And then you have to run a lot of numbers before you can come up with a...
Well, of course, but that's what I'm saying. Like, what your numbers are going to be. So it's kind of like you're pricing that in.
I don't know, bro. What if you're barely starting out?
Hey, man.
But at the same time, it's for fast food chains. So
yeah,
we'll see. But exactly. I mean, fast food chains probably do have the money to pay for it, and it's probably no biggie.
Hey, for sure. I mean,
but at the end of the day, look how much more expensive McDonald's is.
Yeah, man. Fuck it. Don't eat McDonald's anyway.
I mean, I don't know, bro. Every now and then, you got to get a little poison in you.
A little bit, huh?
You know what I'm saying?
Yeah, it is poison, man.
Yeah.
That shit is like, you take a bite of it.
And, dude, did you hear about the government shutdown?
Yeah.
That's crazy, which caused crypto to go up, spike up. Now, some may wonder, why the hell would crypto go up in this instance, right? In this government shutdown, potential government shutdown. Well, the thing is that crypto's future pretty much lies upon the failure of fiat currency. So if there's fear or mistrust in the government, that means there's mistrust in the U.S. dollar, which then, becomes a pretty positive thing for crypto. And then not only that, bro, well, the House Speaker, McCarthy, just got removed. You don't have to tap in too much into politics, but just to talk about what's going on with the U.S. government and how it's affecting the crypto market and, well, maybe even stocks. I seen stocks were up for a little bit, right?
I didn't see.
I seen some green. I don't know.
Yeah,
I tapped in the news and I seen green. So.
Yeah, it was up a little bit, but I feel like that's mostly from what happened like not even a month ago, like a couple weeks ago. Of like remember the stocks fell a ton. I think it was when
sell off.
Yeah, I think it was when the inflation report came out that they were going to raise again. I think it was then when the next couple of days, oh shit, it was red for the couple of days straight.
It was bloody.
Sure. So I think now just kind of like slowly coming back from that, and then it's going to be the same range, bro. We're still in the same range. I feel like
we're like bottoming out right now, and we're just kind of like barcoding.
Yeah,
just up and down, up and down, up and down.
Yeah.
Now, Adrian, your top 3 stocks for Q4 of 2023. Talk to me.
All right. Well, I didn't really do just Q4 in general. I'm only going to recommend. This is not recommendation, actually. We are not financial advisors. But no, I'm only going to give you the ones that I think, that I have in my account
for Q4.
I mean, that I'm just holding for years.
No, but we got to give them the Q4 ones.
I mean, okay, I'll give you Q4 if you want. I mean, some of these are still specific, bro. Altria. I love Altria Group. MO. Dude, Christmas time, everybody smokes a pack. Everybody's stressed. For sure, bro. It's true.
Well, mostly through financial stress.
Yeah, exactly.
Right?
Yeah. So, yeah, I love Altria. Their dividends is great, bro. Every I don't think it's every quarter. I think it's every 2 quarters.
Okay.
I get paid like $35 just holding it.
Nice.
So it's like, it's a pretty, it adds up for sure. Another one recently, Pfizer.
What?
Pfizer, bro.
What, the booster number 69 came out?
Whatever, man. Whatever the next booster is, whatever the next vaccine is. I mean, if you're in it for the money, bro, Pfizer might be the way to go, dude. Like,
you're technically investing in some drug dealer.
A legal drug dealer.
Yeah.
A legal drug dealer.
Yeah, that's literally backed by the government.
That's literally, how could they fail? They're too big to fail.
Exactly.
No, but I think they fell quite a bit. I think they do. I want to make sure. I believe they actually do pay a dividend.
So they're at a sell off right now. Is that where you're saying it's a buying opportunity? Potentially could be, not financial advice.
Not financial advice. We are not financial advisors, but yeah. So I think just because they had a pretty big sell off, and there's been no talk really about Pfizer ever since COVID kind of started dying out. So and I think dude, they're still huge players. Right now, they're up there with Johnson & Johnson.
Of course.
You know what I mean? So I think they're not going to go away anytime soon. They came down quite a bit, and they do pay a dividend, 4%, if I remember, 4.881.
Okay, and then number 3.
Well, on here, I had on Walgreens. But
why? What? That is such a random stock.
It is, but I'm going for just undervalue, bro. And right now they are like really,
what are they sitting on?
Bottoming out $22.25.
Okay.
And their all-time high is $96.
Which was 2021?
Which was, no, man, I think this was way long time ago. This was 2015. That was the high. Its most recent high, that's like 2018. 2019, it was $59.
I guess that's a good stock. That'll probably be sitting at 30, 40 range.
Listen, this one, who knows? In
my personal opinion, I think it would be sitting around that range in years to come.
The problem, the years to come. That's the problem, is where it's like right now, dude, Walgreens is probably a shitty pickup because we still have so much financial stress that we could still go through. Yeah. But if we're looking for value, and you're looking to finally add on, allegedly the government said that by the end of the next year, interest rates will finally come back down. So
look into Walgreens.
Look into Walgreens. Just look into some value stuff, guys. Maybe it's time. Maybe it's time to finally start switching.
Well, if Walgreens is undervalued, that's pretty good. That means that the dividend yield, if it pays a dividend, is pretty high right now.
It does actually pay a dividend as well. Let me give you the exact number.
But if you're telling me it's undervalued, that dividend should be sitting juicy.
Well,
that's what that should show you. That's an indicator of undervalued.
It does, and it pays 8.51 right now,
dude.
Yeah, so it is, dude. It is a pretty good.
That means it's hella undervalued.
Yeah.
So all right, Latin Welcome. So actually, let's talk about that real quick. When you see a stock that genuinely, let's say their yield is between 4 and 6%, and their yield is over 6%, 6% plus, that's a good sign because dividend yields could only go up when the price of the stock goes down. Because the dividend yield is a percentage of whatever that stock price is that's going to be paid to you annually, right? So if that's 25 cents and let's say it's $25, that's 1%, right? So that's a 1% yield. But if it goes down a little bit, let's say it goes down to $20, it might go up to a yield of not 1% anymore, but 2% or 1.5%, right? Seeing the dividend yield and seeing a juicy one, you're locking in the stock at a juicy rate.
Yeah.
But 2, it's an indicator of undervalue.
Yeah.
Of current turmoil.
Yeah. And, that's also part of the risk. Anything that's high yielding, it seems just to be always risky, but it's part of the game.
Now, I was going to just be safe, bro.
Go ahead.
My personal opinion. I was going to be safe for Q4, and I was going to say Nike, Costco, and Apple.
Okay.
Right?
Okay.
Not high dividend payers at all, because Nike's at 1.42.
Mm-hmm.
Costco's at 0.71. Apple's at 0.55. Okay, and the current prices they look to be pretty up there. They look like they've kind of recovered from the looks of it. You got Nike at 95, you got Costco at 571, and you got Apple at 173. They look all right. But why am I picking these top 3 stocks for Q4 of 2023? And once again, not financial advice. I'm picking these guys, bro, because one, everyone buys Nike. Mostly everyone buys Nike. Every family in the U.S. is going to buy 1, 2, 4 pieces of Nike, right? That's why I would be betting on them right now. Maybe keeping an eye on their price movement and buying some of the dips. Now Costco, bro. We got the Thanksgiving dinner coming up. We got the Christmas dinner coming up. We got the decorations coming up. Where do people usually go get that from? Costco. So Costco kind of goes up. Not only that, but people also stock up on, just food and ingredients in general. And Costco is just a great stock to always hold. You want to be buying that throughout the year, not just Q3 or Q4.
I love Costco, bro. I wish it was a little bit cheaper, but
I mean,
I love Costco.
You got to do what you got to do.
It's a great stock. I wish I could get it.
The good things they have fractional investing.
They do have fractional,
which is good, because if that didn't exist, you would have to wait to buy one whole share.
Yeah.
Now, Apple. Why Apple? Well, dude, Apple is just a mega giant. And until they crack down on its monopoly, it's not going to go anywhere soon. Until they actually, follow the rules, because there's actually a law where a company can't hold, I think, over 50% of the market share.
Yeah.
So, and I'm pretty sure, I'm 100% sure Apple's been, breaking that law for years.
Hey, and nobody says anything.
And no one says anything. But until the monopoly, their monopolies, stopped, I don't see any way that you can't go wrong with them. Mostly Q4, people buy iPhones. And at the end of the day, Latin Wealth Club, my picks, other than the AZs, are more of a safer bet. This is more of your Toyota. This is your reliable, bulletproof stocks, in my opinion. I'm not a financial advisor. This is not financial advice. But I will say, Adrian brought up a lot of good undervalue, a lot of good potential, more profit-making stocks, right? In my personal opinion. Once again, we're not financial advisors. In my case, though, I'm looking more for, you could say more like wealth holding. Like I want to maintain my wealth, right? I want to maintain it. I want it to grow, right? And you're more of like, I'm looking for undervalue. Oh, I see this is undervalued. Let me buy it so that way I could get on. I could catch on the rise, and then you could possibly move into these safer, more wealth holding stocks like Nike, Costco, and Apple.
I disagree, bro. I feel like
really?
most of my stuff is actually for inflation because of the dividend payouts. Yeah.
Okay.
Most of the stuff
I see your strategy. Yeah, so your strategy is to combat inflation.
Yes.
Okay.
Yeah. So
dang, you got me on that one. I didn't even think of that.
Yeah, most of I think almost every, maybe one or two don't pay a dividend, but most of my stocks pay a dividend.
But the fact of the matter is, you're looking for undervalue, so that way you can outweigh the inflation.
Exactly.
And then hopefully, like for Walgreens, for example, 8% return on the dividend yield. Yeah, you're gonna kill inflation. Yeah. Okay.
Yeah, and then year over year, hopefully, yes.
See, I was being more on wealth storage. You already have $10,000-$15,000 saved up. Yeah. You want to move into the market. You're more of like, you have a little bit, and you want to turn that little bit into a little something more.
I want to turn to $1 million, but right now, how am I going to do it during the inflation? Right.
That's true.
So it's like, I'm also storing my wealth. And sadly, I wouldn't say I have enough wealth to really like own CDs or anything like that just yet.
But even then, CDs don't. You'll make more on stocks.
Well, yeah, but if you want to play, it's like, let's say a millionaire comes in, has $500,000 to spend,
5%. Yeah,
exactly. Yeah. So they're gonna go with CD. But for me, I'm not yet, but I can still, with the money I have, still make a good amount off just what's it called? Dividends. Sorry.
Yeah. Well, not only that, but what I was gonna say was, even if you combine these lists of stocks, right? Yours and mine, that actually makes a really good portfolio.
It does, yeah.
It really does.
It's a nice,
because mine is more of like your defense.
Yeah.
Yours is more of the offense.
It is, yeah.
And that would be great, because you're going to be diversified 50-50.
For sure, yeah.
So I think that was a great podcast, bro. And I think we talked about some things that we haven't talked about before. We talked about current news, and we talked about our top 3 stocks, and actually top 6, because if we combine those, that makes a really great portfolio. But with that being said, guys, hold on. Any last words, AZ?
If you guys want us to put these into a trading, a paper trading account, I think do that, so we can track how these stocks do. Yeah,
I think we should, bro. And then that way we could always open it and then talk about it.
Yeah.
But with that being said, guys, this is the end of the video. this is the end of the podcast. We'll short one this one, but make sure you guys stay tuned for this Monday. We're gonna have a rapper scheme, Westmount Scheme over with YE Beats, and we're gonna be talking about how he got started rapping, why he got started rapping, his passion, and all that. And then we're gonna also talk about the music business. We talked about it a little bit with Twinkie YE, but we're gonna be talking about it with a rapper and what he plans on doing in his future plans. And how being a rapper is actually being an entrepreneur. A lot of people don't know that. So make sure you guys stay tuned for the Latin Wealth Club podcast. All right. So with that being said, it's all money in, no money out. Stay dedicated, stay motivated, and we'll see you on the next one. Play that outro easy.